Hi everyone, I'm back with a video. I haven't recorded my trading sessions for a while, but today I had a chance to do that again. This is New York session, 25th of September 2025. We're currently 2:40 London time, which is 10 minutes into New York Open. That is the first 500 candle, the second, and now the third. I'm waiting for the 15-minute opening range to form, and then look for a setup. So market has dropped 134 points since the open. So it's quite a significant opening range of 137 points now. That's a massive opening range. Your typical there would be 60 points, 30 points, 40 points, 70 points, but 130 is a bit on the high side. The market moved quite a lot in pre-New York as well. Obviously the dump yesterday and the pullback and the overnight consolidation and then the pre-market and post-London moved quite nicely to the downside. And now we have ourselves a very large opening range of now 150 points. It's very tricky when the range gets that big to look for opening range breakout trades, because pullbacks to EMA, retest of EMA, goes from the usual 30-25 points to 40-50 points, which makes trading the breakouts very difficult by the mere mechanics of the opening range strategy. So we have a first 15-minute range fully formed with 3 significant bearish candles with barely any wicks on them. No hesitation. Clear directional move to the downside. Look at that, 56 point candle. 43 point candle. And a 50 point candle. And if you can push back up to these areas and then break to the downside again, we'll do the contrary. So 1 TP would be... With the sort of range we have today, I will be merely trading towards 1 take profit, like I mentioned before just a while ago. With such ranges, the pullbacks can be really cruel, and even if you're directionally correct, the pullbacks can give you a red day. It can come to a point where you can no longer hold the trade. Seems too excessive, so you close the trade, the emotions kick in, and then the price moves back to your direction. For example, we got a breach here, the EMA was around 45 points away. So with opening range breakouts, you have to expect EMA retests of 20 EMA. It is quite within the strategy's scope to trade down or up along with the EMA retests. They're not invalidations, but part of the moves, depending on the market. We have a very quick market, they can move without it. If we have a slow market like yesterday, they're basically integral to how the strategy works. I will demonstrate here briefly what happened yesterday. This is yesterday's 15-minute range. That's our first breach, which is in line with the daily bias, but a little bit unideal for me due to the difference, due to the extent of the breach away from the opening range bottom, because it adds to the extent of the retest, which is why I'll reduce my size whenever breaches are this big. Some people will wait for a retest and then enter here because that gives them a better entry. But my model, I prefer to enter with a breach because I see the retest of EMA as integral to the strategy's success. and basically the order and the structure of how price moves, not as invalidation. So you can see immediately pulls back to EMA, manipulates to an EMA, 35 points, and then goes to my direction. Now, if my size was not reasonable, this could have made me close my trade, even though it made structural sense to hold the trade. And as you can see, a clear line respected till basically till the very end of the session, as you can see, until this point really. But that enters sideways consolidation, so it doesn't break it. So yeah, that pullback and manipulation of EMA was 35 points, but I had sized down because I was expecting it due to the size of the breach. But I didn't want to miss if the move came in sudden, which it does a lot of the time. So I entered with a reasonable size, held it through the pullback because I knew my line was being respected. And then, as you can see, it goes to my direction. I held the trade until about this point here, which was the third TP, first, the second, the third. I closed the trade at third. Obviously, I wished it a little bit more, but that's something you'll always face in trading. I have now pushed back up above the 50% of the opening range. Quite a push back up. Made a structural sense. So if you took that long again, very well done. It's now above 90 points. So I'm trading my Fundingticks Pro Plus Master accounts. I've got 6 of them, 50k, and I am basically a green day away from a payout. Love Fundingticks, by the way. Link would be in the description if you wanted to grab your challenges. It's always good if price pushes back up before a breach rather than giving you an instant breach. That could then, bring up a pullback, make it complicated, play with your emotions. The orb is such a complex strategy. People do say that it's simple. You have to wait for the first 15-minute candle, the first 30-minute candle, and then trade the breakout. It's not as simple as that. It's very complicated. It plays with your emotions. It gets very difficult. The orb can have an entire green week so far as the mechanics are concerned, but you can still have a red week because execution is very difficult and very different from the mechanical success of the strategy itself, because it doesn't rely on human implementation. So until we have a breach, we'll watch the market, and I should skip forward to when I will take a trade, not to bore you. With that consolidation inside the opening range, I like that. I like waiting for the breach rather than just getting a hasty breach that pulls back immediately. As we can see, Nasdaq's holding the lows of the opening range quite beautifully. I should say that I like that quite a bit. Now we can either expect a bullish breach to the upside or rejection at this juncture and falling back down, i.e. further consolidation and chop. We are at the opening range highs, top of the range to be exact, and price is looking to breach it. but it's facing resistance. We can see the opposite of what happened in gold here on Nasdaq. We had a 1 minute fake out on gold. On Nasdaq, we have a 1 minute success here. That's the 1 minute breach, and it's already up 26 points with minimal pullback. Now 30 points up, but on the 5 minutes, we don't yet have a closed candle above the opening range. So, basing your entry on the 5 minute today, right now, just cost you a trade. Not just that, but also we are 34 points above the opening range. So if this candle closes here or any higher than this, it's a very dangerous situation to trade, to long at least. So I'm in. I reduced my size due to the size of the breach, which is 27 points above the top of the range. Very unideal. Puts us 60 points away from the 20 EMA. It's a dangerous conditions for trading the opening range breakout or any breakout strategy, because breakout strategies tend to position you on the top of or bottom of ranges. So you're longing at the top of a range, shorting at the bottom of a range, which on a choppy day is the worst thing to do. So if the range is quite big and the EMA is too far because the moving average is larger, it makes sense to size down. Ideally, I'd be looking for that first TP, which is at 657. That's just my final frontier. I can close the trade before it because of the nature of the day. So up beautifully, actually. As you can see, I've entered that wick, almost the bottom of that wick. Capitalize a little more on that distance. Added some points to my possession. So even if I didn't size down, this so far looks good. It would have been a safe trade. Another thing about reducing your contract sizes. Yes, it has the benefit of that reduced risk. If your trade is not about where you place stop losses, but it's based on trade invalidations, which is unorthodox, I get it. But that's how I trade. The downside to reducing your size is you'd have to stay in trades longer than you'd have to if you entered with your usual size, right? So I'm looking to close above that line. There's a monetary goal for me there. Getting these accounts to payouts. I'm not risking it by overstaying in the trade. The stakes are higher. Yeah, I missed the chance to close the trade at the tip of that week, the second candle. Don't know why I missed that, but it's currently really hesitating to get there. Alright, price is finally getting there, seemingly so. Misses us by 2-3 points, for God's sake.
Order filled.
So finally, price hit TP. Successful trade. There it is. So we caught a 38-point trade. Obviously, this could continue towards the first TP there, but there's a lot of uncertainty, so I closed it early. I moved my TP down from here to these wicks. There's a lot of hesitation. Didn't see it necessary to stay, but for a small difference. I needed this day to get a payout, and I got it. So that's what matters. Thank you for watching. I'll see you in the next one.